Okay. Please let's start. Let's start. Um. Yo, please, if you can see my chat and hear my voice, please let me see hi on the chat button. If you can see my chat and hear my voice loud and clearly, let me see hi on the chat button. If you can see my chat and hear my voice, let me see hi on the chat button. Okay. 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 If you can see my chat and hear my voice, please type hi. Please type hi. If you can see my chat and hear my voice, please type hi. Okay. Let's start. Let's start. You are welcome. You are welcome. You are welcome to. You are welcome to KA Trade. KA Trade. All this our free webinar. I'm always willing to teach some people or what I know. I just want to share what I know with some people or without charging anything. If you want to compensate with that one day, I will be fine. So for now, we don't want to waste time. Let's start. Our topic is what? Understanding market nature and structure. Market nature, structure, and what? Psychology behind the market. Psychology behind the market. Sometimes I find you people always, please don't do anything on my screen. Please do not do anything on my screen. Don't do anything on my screen. I need to do something. Yeah, please don't do anything on my screen. Okay. Okay, thank you. Okay, thank you. Understanding what? Market nature, structure, and what? Psychology. We are going to take it one after the other. We are going to take one after the other. Please, make sure you follow me very well because I will surely take my time and do everything step by step. Okay. I'll board it. Okay, thank you. Please, can we see now? Please, can we see what is on the chart? If you can see, what I have written here, please type hi. Okay, thank you. Thank you. Thank you. So we are going it step by step. First, we are going to look at the nature. When you talk of nature, the characteristic of nature is what the trend line, either the trend identification, market nature. And then the market nature, the trend identification also consists of what? Impulsive, and then what? Collective flows. What I mean by the market nature is, we have two types of the market nature is what? Trend identification. You have to identify the trend. That's the market nature. Market always moving in what? Either uptrend or what? Downtrend. So you may experience something like this. This is what we call what? Market nature. This is what we call the market nature. You may experience something like this, going up. I'm coming, sorry. You may experience something like this, up, down, up, down, up, down, up. So this is what we call what? Market nature. Then we have what? Two types of market nature. That's what? Impulsive and then what? Collective. What I mean by the impulsive is what? Impulsive is one whereby the market moves quite strongly or heavily in on one direction, or covering a great distance in a short period of time. Let's say we are in what? Uptrend. Let's say we are an uptrend. If whenever we are on uptrend, the impulse is what? It's going up like this one. Then we have a mini collective. Then we have what? The impulsive, and then what? The collective, and then what? The impulsive. So this is what we call here. This one is what? The impulsive, and this one is what? The short one is what? The collective. So we say the impulsive phase is what? Is one whereby what? The market moves quite strongly or heavily in one direction, or covering a great distance in a short period of time. So if you let me give you live chart example. Let me give you um let me give you a typical example from here. You may think that this one is familiar to you, but it is how you go about it, how you always what? Go about it. Let me try to delete everything from here. Please, 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 please.
Mo sọ má pariwo jọ.
Please, Pastor, can you please unmute yourself? Please mute yourself. DJ pause. Okay, thank you. So let's take a look from here. Just this here. You can see that market is what? Moving in the way that from here, you can see market in what? In downtrend, moving a down, then collective, impulse, and what? Collective, then impulse. So from here, you can see that the impulse always is what? Is the one moving in a strong. So if you want to find high probability trading your account, if you are trading and want to find high probability setup, you have to what? Always ignore the what? The collective one. You have to always ignore the collective one. So you are always looking to trade the impulse one. You always wanted to trade the impulse. We say the collective is the one straight move in what? The opposite direction of what? The trend. It's always slowly. You may experience bullets and then the bearish candlestick in between. But the impulse one, you may experience is that if the market is the uptrend, you are going to have it the bullish candlesticks. And then if the market is a downtrend, you are going to have in what? A bullish candlesticks. I hope you are getting me. If you understand what I'm saying, please type hi. If you understand what I'm saying, please type hi. If you understand what I'm saying right now, please type hi. We just start. I'm just trying to give you the introduction. I'm just trying to give you the introduction before we start everything. So if you understand it, please type hi. Okay, thank you. Thank you. Let's continue. Let's continue. sorry. Oh, I'm sorry. Uh, okay. So what we say that the market nature is what is whereby you identify what you identify the market or market trend is you identify what the market trend is, either the market is what uptrend or what the downtrend, and then the downtrend under the trend also consists of what the import phase and then what the collective phase. And then when it comes to the trend identification step, when you say the trend identification step, we have the downtrend and then we having a what uptrend, and also we having a sideways market. We have three types of market trend. We have three types of what trend identification. We have the downtrend and then the uptrend and then the sideways, which is consolidation or choppy or ranging state. So this is what we have. We have you may anytime you open your chart, definitely you are going to experience one of these market strength. But you are going to experience either an uptrend, or you are going to experience the downtrend, or you are going to experience what sideways market. So you may experience something like this, an uptrend from down. So from the uptrend, we have in the we have a characteristic of what uptrend, which is higher highs and what higher lows. We have a higher high and what higher lows, and then the downtrend we have higher lower lows and what lower highs. Definitely, you may experience one of these market states. I'm going to teach you how we go about it step by step, how we trade all of them. We don't just trade, we don't just say the market is in uptrend, so I'm going to what? I'm going to buy. Or we don't say market is not downtrend, so I'm going to what? I'm going to sell. We don't also say market is going up, so I'm going to what? I'm going to buy. We don't do that. This is what majority of traders find it difficult to trade. Let's say if the market is in the uptrend, we only interested in what buying opportunity. You are only looking for what buying. You don't want to see yourself what selling if the market is what in uptrend. If the market is uptrend, you don't want to see yourself what buying. You don't want to see yourself selling, but you wanted to see yourself what buying. And also, if the market is downtrend, you don't want to see yourself what buying, but you wanted to see yourself what selling. How will you go about it? If you want to buy, if a market is what down uptrend and you wanted to buy, or what you do is, let's say we are here recently, the market is here recently, we having something like this. Okay, I'm coming, sorry. We having this thing here. Let's say you open your chart and you found out the market is in what uptrend, and you see the market already move in this way. It is already here. We are considering only this place. We are taking here. We're taking this here as a consideration. Let's say recently you open your chart here and you saw something like this. You don't want to see yourself either buying here because you saw that market is in the uptrend, so you are going to buy here. What we do is that whenever you see market pushing up like this, we consider it as already in high. There's one thing you need to put in your mind. We buy on the lower price and we sell at a higher price. What we do, we buy on a lower price and we sell at a what a higher price. So whenever you see market is pushing up like this and it has break a certain resistance, we consider it as what a high. That one is what is a higher high already. So we are waiting for what the market to pull down to giving us what a low, which is what higher low before what placing an entry. So we are only interested in what taking an entry here. We are interested in what buying here. We don't buy at a higher price, because if you buy here, meaning you are buying at a higher price. But when you wait for the pullback and you buy here, you are buying at what a lower price. Do you get that? Please, if you understand what I'm saying, type Y. If you understand what I'm saying, type Y. If you understand what I'm saying, please type Y. Please, are you following? If you understand what I'm saying right now, please type Y. Okay. So there's a one tip you need to put your mind for now. We buy at a lower price and we sell at a higher price. And also, whenever you see it is the same thing, the opposite side for the downtrend, we sell at a higher price and we buy at a lower price. So you don't want to see yourself selling here. You don't want to see yourself selling here, but you want to see yourself to sell at on a tail leg of the markets. So let's look at the choppy one, the sideways one. This is whereby many traders find it difficult to having patience to wait. We don't place trade. Whenever you see something like this, you don't need to what place any trade depending on your strategy. Someone can trade, I don't judge. Someone can what trade, maybe the person will buy here, then the person may be sell here too. I don't judge depending on your strategy. But for me, I would advise you, this one of this market stage, I would advise you to try to avoid during your trading, because the market can what either break down, retest, and go down again. So if you want to get a high probability setup, I would advise you to what to wait for consolidation to get over. Please, if you're a plus action trader, the most important thing to what to exercise patience. If you don't have patience for the market to give you strong confirmation, you always will be the wrong side of the market. Let's say if the market is uptrend and you are always chasing the uptrend, or you are always chasing the buy opportunities, you will never be on the wrong side, because the probability to win is higher than what the probability to lose. If you try to sell here, you if you try, let's say if I have found out that many of you always try to sell whenever you see that market is overbought because of the indicator you are using. You see that the market has able to push up a very strong, and there's again a very strong momentum, and many people will try to place in a sell entry here. Please, if you do that, you are just risking your capital. There's one key point you need to put in your mind. Whenever a market wants to change a state, let's say price is in uptrend. Whenever price wanted to change, you find out that the price I give us and what equal price. We are going to have a certain here equal high. You may find other price are also giving us an equal high. But when we get an equal high like this, you don't need to place a sell here. But we do what? We wait for what? The market to able to pull down, retest, and go down again. Then you place here. We don't want to sell wherever market is already on low. Right after the breakout, we don't what? We don't sell. Why? Because the market is already in low. And our rule is what? We sell at a higher price. And what? We buy at a lower price. So you don't want to see yourself selling at a higher price. Because let's say when we see market is doing like this, it is already in uptrend. And you find out that it has created what? A double top like this here. You may think that you have to what? You can take a sell entry around here. Right after your entry, definitely you see that there will be a candlestick completed form before you make it. So you may going to make your entry around this area. And right after your entry, the market may what? Reject on you and pick your stop loss. So what we do is that we wait for the market to gain momentum. What is the momentum? The momentum is whereby giving what? 1, 2, 3 move. So we call this one, and then 2, and then 3. So we always go on the what? On the 3 legs. Please, do you understand what I'm saying? Are you with me? Please, are we following? If you understand, type Y. Okay, thank you. Thank you. So we always what? Go accord. We always follow them. We have to what? Make the trend as what? Your friend. If able to make the trend as your friend, I bet you will never close a day with red color. I'm not saying I'm giving you 100% accurate strategy, but if you're able to have patience and try practice this thing several times, you're going to develop a certain strategy for yourself, and whereby you will be a profitable trader. You will never lose. You will never lose, and you can even build a small account less than even $20. I bet you. You have to follow the market. When you say the market rule is whereby following the trend. When you find out market is consolidating like this, please try to avoid trading something like this. Just wait for the breakout. Right after the breakout, do not make entry. Why? Because we call that one is already a low or it's already in high. So we wait for the retest. The retest are going to create a lower low, or are going to create a what a higher low. Then we take an entry from there. Do you understand? If you understand, please type Y. If you understand, please type Y. Okay, thank you. Now we understood market nature. Market nature. Then we are moving on to what structure. We are moving on to market structure. So we all know many types of market structure. That's the double top, wedges, and then and so on. I want to give you a typical example from the main chart. Or let me go to VIN 75. See whether I can find a certain structure. Oh, please, do not unmute yourself. Please do not unmute yourself. Just mute yourself. Pasha, can you please mute yourself? Okay. Okay. Let's continue. We are moving on to the market structure. Look at here. This is what we call the market structure. Market structure, we have a double top or double down, triple top or triple down, head and shoulder, and then we have inverse head and shoulder, we have wedges, and then we have flags. So if you look at here, what do we have? We have a double bottom. We have what? A double bottom. And we said what? We don't what? Praise saw right after breakout. Let's say if you place your entry here, right after this candle, many people are going to make an entry around here. So if you place your entry here, you see how markets play here. If you're having a small account, you will be sick. Definitely you will sick. So you wait for this one to get over by what? This one right after this momentum shift, then you place your entry here. Then your stop loss what will be below this candle. See the way you ride the market. So even if you haven't $5 account here and you're able to place an entry here, you will never blow your account. So from here to here is 15 minutes time frame. So from here to here, you will definitely get about, let's say the loss site you use was 0.002. You are using a nano loss site, and you're able to place an entry here with a $5 account. Before this will end, you make about $20 here. You can earn about $20 from here. So if you're able to have exercise patience, because let's say you make entry right after the breakout and you having $5 account, even only this candle can reap all your profit. Only this candlestick. Let me show you where. Only this one. Let me zoom out so that you can see it. Okay. Look at this candle. Only this candle can even blow your account, because you having a small account. Many of you fear when you see red. So you don't need to take a sell, or you don't need to buy here right after the breakout. By what we do, we wait for what? Pullback. Then we place an entry from there. So what I mean by the market structure is that you wait, if there is a certain pattern, you wait for that thing to get over. Let me give you some typical example right now. Recent market or market price VIX 75. If you look at here, let me go to 5 minutes time so that we all know that the directional buyer is what? An uptrend on VIX 75. We know that directional buyer is what? Uptrend. Look at here. So right now, look at here. So this is what I mean by the market structure. What is this? This one is what? Our descending, right? This one is descending pattern. You see that market is moving in what? Upwards. This one is what? Ascending structure, sorry. This one is ascending structure. You see that, you can see that market is what? Moving in upwards. And this one, we don't trade something like this. You don't need to what? Trade something what? Like this. You don't need to trade. You don't need to trade something like this. We only trade after the breakout. You can see that market has broken this line and we having this thing here. So right now, what are we anticipating? We are anticipating what? Retest around here, then continue to sell. Are we getting it? So right now, if whenever you find out that market doing something like this, we don't trade. We rather what? Draw the trend and wait if there will be a breakout or continuation. If there's no breakout, if market will continue, there will be what? An equal price around here. There will be an unequal price around here. If there's equal price, then right after the breakout, then you wait for what? Retest, then you make entry around there. So right now you find out that the market is able to break out around here, and we are waiting for market either test this neckline. Let me do it so that you can see it very well. We are hot. We were waiting for market to able to test this zone. We were waiting for market to test this zone. Then right break out here. We want the market to pull down like here, then continue, give us a nice retest, give us what? A nice retest before what? Continue, before coming down again. But here we can see that market did not what? Able to pray in that way. So that's why you need to what? To exercise patience, but a rather testing what? The trend line. A rather testing what? The trend line. So what we do right now, whenever you find out market doing a certain thing like this, what you do right now, you have to exercise patience. Just continue analyzing the market. Do not make an entry right now, because you know that overall trend is what? Uptrend. So the 5 minutes here, you are only what? Only looking for entry. You are reading for the entry, not the structure or not the market directional bias. So if able to find out if able to find out that it has give us a very rejection here, strong rejection here. Now you can take a sell entry here, then you place your stop loss around here. So looking at this time, looking at this time of VIX 75, you can see that it can give us a very strong signal for sell. It can give us a very strong signal for sell. And if you sell here, you are going to target this one. Here will be your first TP, and here will be your last TP. This area will be your last TP. Why? Because the market is what? In overall trend is what? An uptrend. So whatever is doing here is just an what? The collective from higher time frame. Whatever is doing here is what? Just an what? Collective from the higher time frame. So you are not focusing on that. But here is just a snap entry. When you get a momentary shift to the upside, now you are going to hold for a very long time. Do you get it? Please, if you understand what I'm saying, type Y. If you understand what I'm saying, please type Y. If you understand what I'm saying, please type Y. Hello, are we there? Okay, okay. What that means that market structure, it can be wages, it can be ascending, it can be descending, it can be head and shoulder, it can be let me delete everything. The recent market structure right now on VIX 75. Let me delete everything. Object. Looking at here, we all know that the directional bias was uptrend. Where do we read the directional bias from? We read from what the higher time frame, which is daily, 4 hours, and 1 hour. That's where, oh, okay, that one will be that the final. Fibonacci retracement also is a different strategy. We will tackle that one later. That one also is a different strategy. We will tackle that one later. You can see that from the daily time from the higher time frame perspective, we can see that market is in what? Uptrend. Can we see that? And it's created a high here. We having a high here, and you can see that right now we having what? We have a broken out. You can see that from the daily market as what? Broken. So definitely there will be a retracement. There will be what? A retracement. When you switch your lower, you switch your time to the lower time frame, somewhere 4 hours time frame. That's where you are going to looking at what? We read the directional bias from the daily time frame and then the 4 hours time frame, and then the structure from what? The 1 hour time frame. And then time frame is for entry makings. We read entry from there. Directional bias from daily time frame and then 4 hours time frame. And then the structure from where? 1 hour time frame. And then the time frame is for what? Reading and entries. But we follow the same principle. What the principle? Going according to 1, 2, 3 move. What the 1, 2, 3 move? Following the trend. Is the market in the uptrend or downtrend? And whenever market wanted to change a trend, let's say if we are an uptrend like this, sorry, I'm coming. Let's say if we are an uptrend, we consider it an uptrend until we break what? The recent what? Higher low. We continue looking for the buy opportunity until we break the recent what? Higher low. And this is what our recent higher low. Until we break this zone, we consider the market is what? An uptrend. So before we, right after the breakout, then we wait for retest. Then we having a momentary shift of the downtrend. So now we are going to having on, because the trend line, when you are drawing the trend line, you need 1 or 2 points joining together. So the retest will give us another point. Please, are we following? If you're able to follow the market in this way, I bet you will never be wrong side of the market. You will pick a loss, but not as much like what you are taking right now. You will never blow your account. I bet you will never blow your account if you're able to follow the market principle. We always following the market structure. We trade what the market does, not what you think. What we think is that you may see that definitely today many people account to grow. Why? Because they may see that market is right now is not support level, resistance level. So let me take a sell entry here. We don't do that. If you sell here, you are just risking your capital. If you take a sell entry here, you are just risking your capital. If you look at the V75 right now, market hit here and look at this candle, it pulled down to here. Many people will sell here, they will take a sell thinking that definitely it's a come here. No, we don't do that. Now you see the momentum shift and it's still going up. So we look at the directional bias, then we follow the same principle from the lower time frame by reading what? Higher highs and higher lows. Are we following? Please, If you understand what I'm saying, type yes. If you understand what I'm saying right now, type yes. If you understand what I'm saying right now, type yes. Hello. Do we understand? Okay, thank you. Let's move on. Now we are going on to market psychology. The psychology of the market. When you say market psychology, let's say we are in an uptrend or downtrend like this. We are on downtrend. Anytime market moving in this way, especially VIN 75, that's how VIN 75 move. I'm giving you some very strong key. If you're able to have patience and follow it very well, you will be profitable. And VIN 75 will give you plenty money if you're able to follow it very well. Whenever market moving in a downtrend or uptrend, the collective one, let's say in an uptrend like this, when the market going to take a collective, which we say we having what? Impulse phase and what? The collective phase. So this one is what? Impulse. Whenever market is going to take a collective, this is how it goes. It not going in straight like this. It's moving like this. Up, down, up, down, up, down, up, down, up, down, something like this. You are going to find out something like this. This is how you are going to see. You are not going to see, or a market not going to move and come back like straight like that. No. You ask the question on the platform. You ask the question on the platform because we haven't. I think it left about 50 minutes to end. So you allow me to continue. So when you say market psychology is where is how the market moves, how the market moves, and it's always moving what 3 stages, upwards and downwards, and then the sideways always comes in the trend. It always comes in between what the trend. The sideways always become formed in between the trend, and that one is that one caused by what the big bankers. That's where they started what taking their profits. So whenever market is in uptrend like this, and the collective started coming, you will find our market moving up, down, with what shorten and west. We call it sometimes I call it shorten or shorten west. It started reducing the momentum shift. So when we find our market during that time, you have to exercise patience, right? If there will be an over of them, you will see one candle giving us a very strong momentum. You will definitely find a very strong momentum shift within the candlesticks. So right after that candle, you wait for the next open candle. The next open candle will create a shadow. It will move to down a bit before continue the up. So what we do is that many people will ask me why I'm always placing the trade right after my position. I will see myself in blue. It's because I have time to wait, or I have time to analyze the market. Not that I'm not taking loss. I'm also take a loss every day, but just that I have time to reduce my losses. I don't change in the market anyhow. I always waiting for the market to give me the rare directional move. So what we do is that the market psychology, if the market is downtrend, whenever you see that market starting giving a short candlesticks, that's where you need to start into taking your profits. That's where you need to taking your profit, because from that right after that stage, it either can be reversed or it can continue. It either can be reversed or it can continue. So when we see something like this within your trend, you can take your profit or you can break even to secure somewhat to profit. Do you understand? Please, if you understand, type Y. If you understand what I'm saying, type Y. Hello? Okay. 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 Thank you. So that's all about a market cycle. Let me give you a very live example from here. VIN 75. VIN 75. Okay. Here is 4 hours time frame. I'm going to give, we are in what? Uptrend. Let me draw this thing here. Okay, let me mark this thing out from here. And go to 1 hour time frame and see. Okay, let's say from 1 hour time frame here, you can see that markets give us a very strong momentum to downside. Momentum to downside here. Can we see that? Strong momentum to downside here. And see what happened here. See what happened here. Look at this place. Look at this space. Can you see that? Market was coming down from here. It was coming here, down. It was coming here, moving downside. By the time market started to what? Reversing from downtrend, you see what happened here. That's market psychology. You can see that market always, it's starting what? Losing a strength moment or losing what? Sometimes I call it shorting west. It's shorting what? West. It giving us a what? A small candles. Whenever you see something like this, there's two things that it should come to your mind. It's either it giving us what? Equilibrium state to continue the trend, or it going to what? Reverse from there. So whenever you see something like this, you need to what? Take your profit, or you secure some profit and see whether the market will continue. But whenever you trading something like this, because VIN 75 overall trend is what? Uptrend. So the entry you take here is what? Just an what? Retracement. So if you take an entry on 1 hour time frame and you see something like this, you need to what? Take your profit. You need to what? Take your profit, because the market might reverse and continue the trend. Underline word is what? Might. Meaning it can continue the downside or it can reverse. So always, whenever you see a shorting west from the market, it means that it's about to what? Reverse, or it giving equilibrium stage or consolidation stage, then continue the trend again. So you don't want to feel the pain. You don't want to feel the pain. It's better you pick your profit and wait for what? Another entry. If you want to feel the pain, that one you can secure some profit. But if you leave it and say that your stop loss is there, so you are waiting and the market able to retrace on you and hit your stop loss, I don't know who you are. So always, that's how market always what moves. It moves in the import stage, and then the collective will give you what the collective is going to give you what consolidation. It's going to create something meaning equal prices, or the wages, or the trend, or it gives us a many structures, equal prices. So whenever you see something like this, meaning the market might change a trend. Are we following? Please, if you understand what I'm saying, type Y. If you understand what I'm saying, type Y. Okay, now if you have any question, I'm giving you, left is about 3 minutes. You can ask your question. If you have any question right now, you can ask it. You can unmute yourself.
Hello, hello, boss.
Yeah, good evening. Yeah,
Yes, so my first question is you said the D1 and H frame they're used for directional bias.
yeah,
And you said H1 is used for what? For the structure, to know the structure, right?
yeah.
The time then we use the
The
lower time frame for
what
entry, right?
yeah, yes. We use the daily 4 hours for the directional bias, and then the 1 hour for the structure. When you say structure means you are reading for a certain pattern, something like this. You can see that there is what? A double bottom here. Can you see that? There's a double bottom here.
Yes, sir.
So where do you need to sell? And we don't want to see ourselves selling here. We don't want to see ourselves selling
Mm-hmm.
here. Can you see there's what? A certain pattern around here too. So if you want to
Yes,
sell,
sir.
if you want to buy from here, you need to wait for this breakout, or you need to wait for this breakout. Can you see that? So this here will
Yes.
be our first entry, and here will be our second entry. Can you see right after the retest, the
Okay,
market
yes.
move to the upside? Right after the retest, market move to the upside. So you don't want to see yourself
Yes.
buying here, because this one is already a high. Are you getting me? It's already a high,
Yes.
already low, and we buy at a what? We buy at a lower price, and we sell at a what? At a higher price. So when we see something like this, it is already in some way, because you can't just place a buy entry here. Here is what? A high risk. But when we wait for the breakout, meaning you are taking what? Reduced risk. We have types of entries. We have high risk and the reduced risk. The reduced risk is whereby waiting for the retest, because that one, it has give you the momentum shift, because probability to win that time is higher. Do you
Thank
understand?
you very much, sir.
Okay, thank
Yes,
you.
I understand. Thank you.
You are welcome. Any question? Anyone who having any question again? If you have question, you can unmute yourself and then you ask. If you have any question, you can ask right now.
Hi, sir.
Okay.
Sir,
Yeah, I'm listening.
can we use Fibonacci retracement to know maybe the high or higher high or lower lows are already
Yeah,
formed so that we can take our entries?
yeah, you can use it. That one you will get there. I will explain it to you, because that one also is a different strategy. But we combine them to become one powerful strategy. Trading with the trend line, and then trading with the support, trading with the Fibonacci, and then trading with a breaking out and retest. Also, they are all what? A different strategy. But we combine them, making one powerful strategy. So we are going it step by step. I will try to explain it to you.
Okay, sir. Okay, sir. But
Yeah.
one more question, sir.
Okay, I'm
About the
listening.
indicator RSI, is it
For the
good for?
indicator, for me, I know all the indicators, but I personally use pure price action. So I can't
Okay.
talk much about indicator to you. I just want to give you more information about price action than the indicators.
Okay. Thank you, sir.
Mhm.
Thank you, sir. Thank you,
You're
sir.
welcome. Any question? Okay, then we will end here next week Sunday, or we will continue from different topic. But if you have any question, you can ask on the platform. I will surely attend to you. May God bless you
Sir,
Hello,
all.
sir.
Yeah, hello.
Yeah, please, I like what you said earlier on about
Okay,
timing.
okay.
Yeah, I feel if we take earlier time,
Uh-huh.
more people will join, and then we also may be still in a good frame work
Yeah.
condition to learn better.
Yeah, so we
But
we will, we
on
will
be,
make
on
sure
be,
discuss this on the platform.
okay, and on
We will
behalf
then,
of everybody, I want to say
yeah,
thank you for
yeah,
giving us this opportunity.
you are welcome. We will discuss on the
Yeah, thank you
platform.
so
So
much.
you're welcome. So
Okay,
we will close here. Next week we will continue from wherever we end. May God bless you all. Have a good night. Bye.
thank you. Good night.
sir,
Bye.
one question,
Paul.
sir. Sir, can we spot our analysis on 4 hour time frame to find a signal? Hello, sir.